Good afternoon, everyone. In today's video, I'll share the different volatility catalysts that we have in store for us this week. Number one, and that's tomorrow, August 24th, is our crude oil inventories reports. This comes out at 7:30 a.m. Pacific, and when we go through charts, I'll share a little trick that you can use to monitor price activity really 4 a.m. onwards to try and get clues for what is likely to happen as the report comes out. Now, after tomorrow, that's where the volatility picks up for the broader markets as well. Thursday, we have two different events that stand out. The first is the secondary GDP numbers, that's before the market opens. And then, most importantly, we have day one of the Jackson Hole Symposium. Now, that carries forward into Friday's activity as well, where we have three different events. We have PCE numbers coming out, and this is before the market opens. We then have Powell speaking at 7 a.m. Pacific. And then we have day two of the Jackson Hole Symposium, which goes the entire day. So all around here, different volatility catalysts, more as we get towards the end of this week, would suggest that price activity is likely to pick up here, one direction or the other, as a result of volatility also increasing. Now you come into a chart here of the S&P, and we've been monitoring really these two channels for quite some time. I shared over the weekend why I'm more bearish than bullish the S&P, and I shared 4 different reasons. Now, since that video, that was this candle right here, we've fallen. We've now fallen to the point where we're towards the bottom end of our shorter term uptrending channel. So this right here is a very pivotal point in my opinion. We have really two different scenarios here that can happen. One is the bulls continue to come in, buy up the support, which then means the shorter term channel is still intact, giving us really two different places on the upside which we could look at for resistance. Really the overall longer term downtrending channel or the shorter term uptrending channel's resistance really near that 440 mark. If instead we see this bearish activity continuing, that gives us more downside targets. We have 400, you have the middle of this channel, but really what we were talking about in the weekend video was the bottom end of this channel as well. So quite a distance that price action can go. Now, if we start by taking a look at the VIX here first, with Monday's activity, the VIX has also popped. So all around here, volatility is screaming that it's likely to increase as the week continues. Now, starting off with crude oil first, which is our closest volatility catalyst, we'll start with the daily time frame chart and then move on to a 1-minute time frame. On the daily time frame, we have a bearish trend. However, we've had 1 and 2 bull candles most recently. And on the upside, the market pulse is serving as a very nice magnet at 95.52. Coming into a 1-minute time frame chart, we can see the bulls taking control early on in the morning here, and really after that 8 a.m. mark, that's where the bulls lost control and we ended up just chopping around sideways. If I zoom out, this becomes even clearer. This was the first 2 hours, then we really just chopped around. Now the question comes in, how can we understand what is likely to happen for tomorrow's inventory report using pre-market activity? That's where I like to use 4 a.m. onward. So this is really about 2 extra hours worth of data that you can use to try and see if there are any clues, if the buyers are giving you clues or if the sellers are giving you clues around what is likely to happen. If we see what happened today, which is price just chopping in between our volatility box clouds, to me, that's your sign that, hey, volatility is likely to be muted, no clear sense of direction one way or the other. If instead, however, with our pre-market activity, we see a very clear sign of price action breaking down one direction or the other to the point that we go either outside of the clouds or even tag the volatility zones, that becomes your hint in the case of which direction do you have the bias. So I found that to be a nice trick, really looking at pre-market activity from 4 a.m. until 6 a.m. to try and gain any sort of clues around crude, what's likely to happen, and use that information to better trade the inventories reports. For all Futures Volatility Box members, you can find a little bit more about that inside of the trade plan. So that's one resource you might find useful. Now let's move on next to the S&P. Inside of the S&P, on our intraday activity here, we saw sellers take over control really at this mark right here. That was 7 to 8 a.m. Pacific. Sellers ended up bringing price action down even lower where we typically expect to see buyers come in and defend this. They didn't. And that to me becomes that first little bit of sign, again, adding more to my bearish bias inside of the S&P 500. Most of that again stems from this longer term downtrending channel And I've already shared why this place is important, but hopefully those price clues come out again in the shape of price either tagging our volatility box zones or even exceeding it, which is very useful information that we can use to then gain a bias one direction or the other. So one more time to recap, for this week, tomorrow we have inventories reports for crude. On Thursday, we have the secondary GDP numbers along with Jackson Hole Part 1. And Friday, we have 3 different catalysts, Jackson Hole Part 2, Powell speaking along with PCE numbers, all of which sets up for the S&P to be moving one direction or the other. And we're at a very pivotal point for that direction to be an important one for the shorter term future. Alright, I hope you found this video to be useful. Take care everyone, good luck trading, and we'll see you in the next update.